Hello, I'm Tim Beggins, president of Elk Trading Company. In today's midweek natural gas report, natural gas prices are higher for this spot November contract, currently trading at 334.30, up 4 cents or a little bit over 1.2%. Now, as you can see here, we've got our parameters. Our downside is right here at the low of 309.30 and our upside 344.30. And right now we've got both our 13 and 48-day moving averages here, the exponential moving averages, which the 48 came in at 339.10. Our high today, 339.60. So why are prices backing off? Well, we've got a high storage expectation for tomorrow relative to, historicals, which is going to be somewhere between plus 60 to 65 BCF. And with the cooler weather across the southeast due to Imelda bringing on a lot of rain, we're going to see an even bigger number the following week. So there might be some short-term pressure. And again, though markets do not repeat, they can rhyme. And just like last year, this November contract is rallying for its first week of spot. And now we'll see if it can hold and possibly move forward. Otherwise, it may repeat or rhyme like last year and head south. Remember, last year, prices topped out around $3 and then headed down to $2.20 into expiration. Why? Warmer weather. And let's look at the hourly chart. And as you can see here, we are above the 330 daily pivot. We went through first resistance at 335.40, and we have next resistance at 3406. Well above that, 346. But right now, the RSI is starting to come off a little bit here. We may consolidate between this 35.40 and 3406 for now. We'll see if the late afternoon ends up in another sell-off before the storage report tomorrow. Again, plus 60 to 65 BCF is the expectation. And here's the front to back spreads. Because the market is moving up in the front to back spreads, this is the DEES26 versus DEES25, has come in. And again, today it's down 2.1 cents or a little over 3.19%. The RSI is pointing lower. So we've got our recent low here coming in around 54.5 cents. So we'll keep a careful eye on that to see if that is broken, because that may be indicative of a further rally in the front month. And as you can see here, let's look at crude oil. This is crude now, it's 17-week low, currently trading around 61.5 cents, $61.5 per barrel. And this is continued weakness here. Why? Because OPEC Plus keeps pushing more barrels on per month as it continues to ramp up its production and start to push the Permian producers down below their marginal cost of additional barrels. And let's look at that 8 to 14-day temperature outlook. Well, it's above normal, folks. And that's going to be a problem long term, because if this continues, then winter will be delayed and we've got a lot of gas in storage. So be careful here. We may rally for the next day or so, but watch out because the weather is pretty mild. Now let's take a glance all the way into October. This is WX charts, and this is October the 16th. And as you can see, we've got a little bit of cooler temperature starting to come into the upper Midwest. This is normal. And then some really cool temperatures coming in across the Rockies. Again, this large front here may be indicative of some sort of pattern change here, so we'll keep a careful eye. And here's our tropical activity, which has been ramping up in the last week. And as you can see, this is the remnants of Humberto, which is now north of Bermuda and heading out to cooler weathers in the North Atlantic. And this is Imelda, which is stealing the energy from Humberto to strengthen. As you can see here, quite a tight eye. It is expected to go right across Bermuda as a Category 2 or possibly higher hurricane. So watch out, Bermuda, here it comes. And also remember, this is part of the Fujiwara effect, which is that two storms in close proximity, they're less than 250 miles apart, can start to impact one another, where one storm starts to pull the energy from the other. That is certainly going to be the case today for Imelda. She is strengthening while Humberto is weakening. Let's glance out at the mid-Atlantic, and as you can see here, it is scattered storms out there, but nothing really of development And of course, now in the Gulf of America / Mexico and further south, it's fairly quiet. And why are we keeping an eye on the tropics? Well, because the water temperatures here are still well above normal. This is 86 degrees just south of Cuba. And as you can see in the Gulf, it's anywhere from 82 to 85 degrees, very warm temperatures and fuel for a possible storm. So let's take a look at the Saharan air layer, which has been inhibiting these storms for quite some time. And as you can see here, we might be getting into a quiet period. The models had suggested this about 3 weeks ago, and it's been kind of late in getting here. We still have some Saharan air layer or dust out there right now. And that is inhibiting probably that development we saw on the other page. But for now, it looks like it might calm down. That may increase storm activity in the mid-Atlantic. And let's take a look at our stocks in the oil and gas E&P sector. This is a market cap between $2 and $10 billion and have a high short float. Our winner for the week, CRK, up 4.63%. Oh, excuse me, now 6.22%, and CNX up 4.1%. These are the natural gas focused stocks. Everybody else mainly in the crude oil sector, especially Northern Oil and Gas, down almost 8.6%. And that is because crude oil prices continue to weaken. And so recapping here, we are currently trading at 333.80, up 3.5 cents for the spot November contract, or a little over 1.06%. Let us know your thoughts in the comment section below. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.